we are looking at non-profit organization. Non-profit organization. So these are organizations. When we say non-profit organization, so they are in business, but they are not in business to make profit. They are in business to provide service.
Services.
Yes, like public schools. Public schools. So the public schools are the examples of non-profit organization. We have other NGOs which might be operating as non-profit organization, but there are some NGOs which they make profit, so they carry need to tax them. But if it is not for a profit motive, we don't tax that organization. So this organization, they don't prepare their own books of account. They don't maintain the wealth books of account. So as an accountant, you need to go and start from somewhere. You start now preparing those financial statements. Like this organization, if we say school, they don't sell. They don't sell, right?
Yes.
If schools they don't sell, meanwhile they don't have which account, that is sales account. Sales account. So they don't prepare the sales account, but they need to prepare a purchase account because they have to order their what? Their suppliers or their goods. So they need to prepare the what? Purchase account. Purchase account and other accounts, but the only exemption account is what? Sales account. They are not making profit.
Profit, yes.
And then there's some other account you need to prepare, like this non-profit organization. It will, so you find that even if it's like clubs, like football, we in Kenya we don't have the famous club like Gor Mahia. So you find Gor Mahia is a non-profit organization. So if it is a club, inside this club, watakuwa na nini? They will have like canteens, they will have like pool tables, right?
Yes.
So they will have segments of the profit. If it is a club, meaning members have to contribute somewhat contribution towards the club. If you are a registered member, you must contribute certain amount. And then, so if there's a contribution, we will open an account called what? Subscription. Yes. So you have to open this account so that you know outstanding areas of this subscription and the one which they are paid in advance. And the last one, that you open now, if this club again they have a pub or canteen, so you have to open a canteen income account. Yes. Once you open that one, now you open the general income statement for the business. That is the income and expenditure. So these are the account income and expenditure. So hizo ni vitu unafaa once you are in a profit organization, this is the account you should prepare. And then again, this organization, they don't know how much they have invested in this capital. So they don't know their capital, right?
Yes.
So we need to first determine what accumulated fund, because they don't maintain this account. So they don't know how much they have invested in this business. So you need to find out accumulated fund using what? We use a trial balance. Trial balance. So we will use a trial balance. So in fact, that's what you need to know about non-profit organization. Hizo account, ukiona swali, hizo account inafaa kuja kwa akili yako, unafaa nifungue this account.
Okay.
So we go straight away because we have wasted a lot of time. We go straight away to November, November somewhere. I think November 2015. Just went November 2015. We opened November 2015. Yeah, the time is running. We have only like
some few weeks.
It was another unit we could have done earlier on, but accounting is so wide. But we are remaining only with the manufacturing. After this, we will go to manufacturing and we do cash flows and company.
The ratios.
And the ratios. So this is November 2015. That is question 3. Have you opened it?
November 2015, question 3.
Yes.
Yeah, have it.
So the question reads, the following is the receipt and payment account of Uwezo Football Club for the year ended at 1st September 2015. 2015. So here we have the cash book, that is the receipt side and the payment side. You can see in our receipt side, which is on debit side, we have the balance of bank cash, subscription, entry, donation, and receipt. All those are incomes. And then we have the payment. We have the purchases, rent and rate, and all that up to the way to the what? General expenses. That is our cash book. Then we have been given additional information. That is, the following access was available. So we have that 1st September 2014 and that 1st September 2015. We have subscription in arrears, rent due, rate prepaid, per payables. Number 2, the per inventory was valued at 828,000 as at that 1st September 2015 and 710 as at that 1st September 2015. So those are the inventory opening and closing. Note number 3, on the 1st September 2014, the value of non-current asset was as follows. We have clubhouse, fixtures, and we have equipment. Note number 4, the new loan Moya was, how do we pronounce that?
More.
More. More was purchased during the year ended that 1st September 2015 at the cost of what? 5 million.
Yeah.
The difference between the actual cost and the amount reflected in the receipt and payment is at rate in allowance. Do you still remembering how we in allowance?
Yeah.
Yes. And then note number 6, depreciation is judged for full year irrespective of the date of purchase. No depreciation is judged in the year of disposal. And depreciation is to be provided as follows. We have the asset and their rate of depreciation required per income statement for the year ended at 1st September 2015 and income and expenditure account and the statement of financial position at 20 marks. Good 20 marks.
Wow.
Yes. So once ukikosa hiyo function utakuwa marked out of 80%. Okay, so so let me take a snapshot so that because my past paper inafika around 2017.
Okay.
Okay. So we can now start opening these books of account. So tumesema the first step ukipewa swali kama hii tumesema they don't know the capital they invested in the business. So the first step is that you open what? You find out accumulated.
Your working is missing.
Oh, sorry. So this is the first step. Step 1 is that with the what? Accumulated depreciation. Hii tutatumia a trial balance. So we will have a detail here, and here we will have a debit, and we will have a credit. So I can underline this one. That is my trial balance. So note, you have to have a note here. Trial balance, we only capture, we only record what? Item at the beginning of the year. At the beginning of the year. That is the asset and liabilities and all expenses at the beginning of the year. So you don't capture anything in between the year or for the, so we only see at the beginning. So you see our beginning period of inaanza lini? It is ending that 1st September 2015. So what we include here is anything relating to 2014. We don't capture anything relating to 2015, right? So we start with the bank and cash. That is an asset. So bank and cash. We have bank, we have cash. Balance pronounced in, because that balance pronounced, it was for previous year for 2014. It is how much? We have got zeros. It is how much?
5096. The balance brought forward.
Yes, balance brought forward. It is
5096.
50996. And then cash.
It is being recorded on the detail side.
This space is so big. I should put it here. 596. The other one is for cash 130. Is 130. That is the only items we need from the cash book. Then we proceed to the other item. You can see in note number 1, the following balances were available. So we only record for 2014. That is our interest. So the first one is we have subscription in arrears. What subscription in arrears? When we say subscription in arrears, we owe the members owe us that money, right? They have not paid us. So for us is an asset, but for them is a liability. Is a liability. So we record it under current asset. That is subscription in arrears. How much?
300.
And then we go to the next one, rent due. Rent due. Where do we put this rent due? Tutaweka side gani?
Due 240, the debit side.
What is a rent due?
Or due, it's an outstanding.
It's outstanding. So if it is outstanding, it's a liability. It's a liability. So all liability should have a credit
balance, sure.
Yes.
Sure.
So we record 240. And the next one is a rate prepaid. We have rates are prepaid. This is the prepayment. Prepayment is an asset, is what we paid in advance. So it is an asset. We debit that one, which is 320. Then we go to payables. So payable is a liability. These are creditors. So we credit our payables at what? 500. 500. What else do we have for 2014? We can move on to note number 2. They have told us the per inventory was valued at 828 as at 1st September 2014. So we have said we are interested in 2014 only. So we have per inventory. Inventories. That is an asset. We debit 828. Then we continue. And 720 as at 1st September 2015. Note number 5. On that 1st September 2014, the value of non-current asset was as follows. So we have the current asset there, that is clubhouse. Clubhouse, how much? 60,000.
60,000, yes.
And the next one is fixtures. Fixtures, we have it 15,000, yeah?
Yes.
Next one is equipment. Equipment, we have, okay. So there was a note. We have been told the new launch mower was purchased during the year ended at 1st September 2015 at the cost of that 5 million. There was another note number 5. The old mower, which was traded in exchange for the new lawn mower, had been included in the cost of what? Equipment at the 1st September 2014 at a value of what? 400. So we need to separate. So we will check 11,200. We remove this more of 400, right?
Yeah.
To give us how much? And here we need now this more, old more. This more. What is a more?
More.
Something.
As I can't recall. More. I can think of more.
So if we subtract 11,200 minus 400, how much? We are remaining with 10,800. So more, we will take now that 400 here. And now the balancing figure here will be accumulated fund. I hope there's nothing else we have left for 2014. That is accumulated fund. So let's balance it off. Debit side is more. So I will take 1596 plus 130 plus 300 plus 320 plus 828 plus 60,000 plus 15,000 plus 10,800 plus 400. What are you getting?
$92,874.
Yes, 92,874. So it means it will be on this side again. 92,874. So the difference here will be my accumulated fund. So I would say minus 240 minus 500. So it will come to 92,134. 92,134. 92,134. That is the first step. We are through it, accumulated. So this one will goes to what? Balance sheet. Is it something hard? Not hard. You pick asset and liabilities and expense. It's just a matter of understanding.
Treating.
Just a matter
Understand
of
and treat it.
Yes.
Okay.
opened another account.
So this one you're only recording the what happened at the beginning of the year, not at the end.
Yes, not at the end. That's why I've told you, you only, like in our case, we only capture anything relating to 2014, not 2015, the current year.
Mm. No, there's a question you sent to me, so I was trying to think which concept can I apply, because we didn't touch anywhere.
Oh,
Fikiria mpaka nikaachana nayo.
pardon?
But I think maybe after here I can try it.
Oh, there's a question I left you.
You sent me for this one, talking about bar trading account, but then I had to think which concept were we discussing about it. Sikuwa najua anything.
Oh. So hapa tu unaweza
Fanya hiyo
tumia
sasa.
hata accounting equation, that is asset equal to capital plus liability. But a trial balance method is the easiest one. So we have done to the first step. The second step is that we have been asked for a per incomes account. So because we have said these people, they only purchase, they don't sell. So we need to have the what? The payables account or the purchases account. So we need to open a control, creditors control account. You still remembering this creditors control account? Bado nakumbuka?
Credit control account.
Yes, purchases
control guy hizi zinakumbuka hizi.
Tulifanya under sales ledger na purchase ledger.
Purchases ledger.
Yes. So we did that one under sales ledger and purchase ledger. So we said
these things
balance product, it is on a credit side. No?
Yes.
So here we have balance product, and we say you put here balance carried down. And so balance product, that is the per payables. Per payables, we have been given as what?
820. Huh? For the same year.
No, yes, we need the balance product from the previous year per payables. We have it.
500.
Yes, 500. The balance carried out is how much? 8?
820.
820. And then what they purchase during the current period, you will find them under the cash book. So you will check the payment of the suppliers on the cash book. How much is that?
Then?
Per purchases on the cash book. What they have purchased this on 2015, the current year. They have purchased. So I'm seeing per purchases. So it is cash. That is valued what? So we call it cash or bank. 43 what?
The balance between the two.
Not the balance between the two. You have forgotten the creditors control account or sales ledger, purchase ledger control account. We normally take the balance product, the balance carried out, and then we check if there was a purchase of or there was a payment of the purchases during the period or during the current period. So unaangalia kwa cash book yako wamepurchase ngapi. Rudi kwa receipts and payment account.
What was purchased?
Yes.
They have bar purchases.
Yes, they purchased the valued how much?
43,628.
Yes. So the account affected here, we don't write per purchases, we write cash. or bank.
Cash or
Bank. So they purchase a good valued 43,628.
628. Yeah.
And then so the balancing figure will be our creditors what? Credit purchases. Credit purchases. So we will balance it off. If I add this one 43,628 plus 820, 43,628 plus 820, it will come to 44,8. Oh, 44,8. So I will balance with that figure 44,448. So I will say 500 minus answer. I'm getting my purchases here being 43,948. I said I take the balancing figure, the total minus 500 to give me 43,948. That is the credit purchases. So nimeona umeanza kusahau ledgers accounts.
I think we need some to revisit.
Yes, so revisit with the quotient. The best way to do it is you find the quotient. Then now after opening the creditors control account or purchases account, the next we can now go to we answer the question. The first question, they've asked us about the per income statement, right?
Yes.
So you will write the name of the company, that is
So for the
yes,
credit control accounts, we are through with it.
yes, we are through with it because they know, and we have not seen any other item which affect the. If there was a discount receipt ungeiweka hapa. Discount receipt.
Okay.
Ingekuwa na discount receipt ungeiweka hapo. Kuna contra settlement, you could have put it there. You write the format of this one. So hizo ingekuwa na hizi item tungeziweka hapa.
Okay.
Then now we can now open the income statement of this subunit, that is the per income. So we will write Uwezo Football Club per income statement. The year ended 31st September 2015. So always income statement, you start with the sales. I'm a per sales. They normally call it per sales, stroke per takings. They normally call it per sales or per taking. So you will find them in the cash book. We have per receipts. In fact, they have called it per receipts. Per receipt. Yes, all these are the name they will call it: per taking, per receipts. So we have a per receipt of how much?
From the cash.
Si tuliandika statement ya per income, tuliandika format, right? Hebu angalia notes nilikutumia. I sent you a format of per income. A format. Tulisema tunaanza na nini?
Bar, canteen sale.
Yeah. Yes.
Then of cost of sales.
Cost of sales. So we are preparing a trading account for per income account. So here you will only capture anything relating to per, not anything else. Kama iko na jina per, right?
Okay.
Ama in another question, kama iko na jina canteen, hizo ndio uta record only. You don't include anything else, only per.
or bar and or canteen.
Yes, or canteen, or the other name they will call it. So now we record our per receipt of 51, 57, 16, right? On a debit side on your receipt and payment, there's a per receipt.
Oh yeah, 57, 16, sure.
Yes, and then because this is an income, we must have cost of
So
sales. And then we will start with the opening inventory. Opening inventory. Opening inventory ni ngapi? Tulikuwa tumepewa kwa additional information. To switch additional information number 2. Per inventory was valued at 820, 828 at the beginning. Then we had the purchases. So hii purchases ndio tumetengeneza hapa ndio it will help us to get a trading account. So we will take this value, that is the 48. Yes. So they will not
from the credit control account.
Yes. So they will hide for you that purchases. They will not give you. Yes. That's why you need to prepare it first. 948. Then we less per closing inventory. Of how much they have given us 710. Plus the total cost of sales of how much? So our total cost of sales
4,066.
828 plus 43,948 minus 710. 44
066.
So when we subtract it, this one should be in a bracket, huh?
It will be 44,066. You added, you put 00.
That is error of transposition.
That one can cost you.
Yes, and you will look for that error, you will not find it. Find gross profit.
Yes.
So our gross profit will be so I will take 57, 16 minus 44,066. I get a gross profit of 13,544. That is my gross profit. Then you look at, is there any expense relating to this per? So you can less it. Say less expenses.
And if there are incomes, you add.
You add relating to that per. The same income statement, the normal income statement here, but the thing is you need to record only for per, specific per. So let's go back to our cash book. On a payment side, I'm not seeing anything relating to per purchases. We have recorded that one.
Then
On our receipts, on a payment side, on your cash book, do you have any expense relating to per? In a payment side, we have per purchase, rent and rates, telephones, water, electricity, stationery, salaries and wages, coach fee, field expense, general, and more. So we don't have anything relating to a per. So let's go to additional information. Additional information, our payables we have done. Depreciation. So I'm not saying anything related to the past. So that will be our net. Will be our net profit. Yes. Our net profit.
And this one is very easy.
It's
If
very
that
easy.
is how it is done, if that is how it is done,
If that's how it's supposed to be done, it is something easy.
yeah. Not unless they trick it somewhere. But if that is how it is done,
They will not change. What they will change is that it's just name and figures. Anything will remain the same. Okay, so that is another step. We go to the next step because they've asked us about what we have done with the per income. The next one is income and expense.
We are supposed to go to
Roman.
statement of financial. I think what you are doing, we are recording the income statement.
Yes, we were answering the first Roman A, question A, per income statement, right? So this value we have got it here, we will transfer it to our income and expenditure account. So it will be on a credit side on the income and expenditure account. This net, that 3544, we will transfer it to income and expenditure account. Another account we need to prepare is subscription account, so that we know how much was the income. We need to record it from the income and expenditure for members. Subscription account. Subscription account is very easy, and there's a free marks. You need to get it from subscription account. Subscription account. So the first thing, you start with the balance upward forward in arrears. So this one is in, that one is arrears. On another side, there's a balance upward down, but this one is advance.
It is called balance?
Balance brought forward in arrears. Those are in arrears or subscription in arrears. It's called balance brought forward. And then again here you will have, this is the free marks I'm giving you, because these figures you will be provided. So it is upon you to see and put it. There is no computation. Balance carried down in bracket. In bracket, this is area, and then here balance carried down in bracket advance. So the moment you open subscription account, you need to put those figures, because it is a free mark. You just see them in the either trial balance or additional information. So like balance brought forward in arrears. You can look at subscription in arrears. Are you seeing subscription in arrears?
Yes.
For 2014, sorry, we have 300. Then you see 2015, how much?
350.
300 is for 2014. What about
350?
350. You just record it and you get your free marks. Then here, we have not been given subscription in advance, so we leave it as a blank. The same. This one, you leave it as a blank. Because I have not seen anywhere giving us subscription in arrears. Then, so you have now captured the free marks. Then you have to ask yourself, did I receive any subscription during the period? So you go back to your cash book. Ulilipwa, unaangalia your cash book. In my cash book on a debit side, I have subscription of how much?
10,000.
So if we debit bank or cash book, we should credit this subscription account. So here we will say cash of how much? 12. 12,000. So the balancing figure here will goes to income and expenditure account. Income and expenditure. And expenditure. So the balancing figure will be, this one will be, the total here will be 12,000 plus 350, giving us 12,350. Which will be the same with this one, 12,350. So the balancing figure will be 12,350 minus 300. So I will get the value I will take to my income and expenditure is 12,050. Ni ngumu kweli?
Hapa hakuna kitu.
Just look, ni kuangalia tu na kupick. Okay.
Maybe the first part will be little tricky, but once you posted the details correctly, maybe you identify the date, or what the items to be put in the debit side and credit side,
And
then
credit
the rest
side.
will just follow. Yes.
So the first part is not easy. It is you who is added. Once you know what is a liability, where do we put the credit balance, the balances of a liability? It's on a credit side.
Right.
Is this an asset? Yes, it is an asset. All an increase in an asset or balancing figure of an asset, nafaa kuwa una debit side. So unaiweka tu. So it's about grouping expense, liability na asset. In fact, this is the easiest part. Yes, because they have given you all that part. It's only you to pick. Is this an asset? Is this a liability? Then, having done that, now we can go straight away and start opening our income and expenditure account. So I will control it again here. So I will have Wesa. So football is income and expenditure. Account. So here I will use it a T format. So I will use a T format, not the. It's not like the other statement. I will use a T format. I will use a T format. So in a debit side, this is a debit side, I will have expenses. So we say an increase in an expense as a debit balance.
Debit balance.
Yes, all income should have a credit balance. So I will start with the side of the income. So we can even start with the one we have just done in our working to corner per incomes. So we can start with that one. We should credit this one per income or per net profit. How much it is? 13,544. Then we have subscription. Subscription here to 1,3550. That is our subscription account. Because we have opened subscription account. So this one, we have debited the subscription account, so we should credit income and expenditure account. So we have exhausted the incomes from our working. Then we go back to our cash book, receipts and payment. On our debit side, we put all the income. Bank.
All the expenses.
Not all the expenses. We are recording incomes.
Oh,
Not exhausted the incomes. So we go back to balance and cash book. We have subscription, we have done, we have entrant fee.
My friend.
yes.
Ambao zinakakaa.
Mowing. So mowing, I've seen it is houses and garden. Ile mashine ya kukata nyasi ndio tunaita mowing lawn.
Sasa hivi. Nenda shule.
Can we continue?
Yes.
Ingia kwa mtandao.
Yuko nje hapo? Yes.
Ndio huko mtandao.
So we will have entrant fee. Hello.
Entrance fee.
Yes, entrant fee is an income on a debit side on our receipt and payment.
Oh yes. Yes, yes.
1160. And another one we have donation. Donation iko na ngapi? 80. 24. So we have done with the income. We can go to the expense side. Let's start with the additional information so that we don't miss. Start with note 1. We have rent due. So we can start with the rent due. Rent due iko imeandikwa aje? Rent due iko accrued into, but ukiona our balance sheet wamecombine, they have combined rent and rate, right? So meanwhile, even here we should combine rent and rates.
But they have not been combined. So I'm saying rent due and rent prepaid.
Yes, but in terms of payment, they pay as one. You see the payment they paid as rent and rate. That is 3304. Under payment on a debit side, receipt and payment. Are you seeing?
Oh, let me see.
Naenda nao darasani.
Receipt and payment.
Yes.
Tulikuwa tumekataza haya jamaa tusiwapatie basi.
So let's continue. So in receipt and payment, you can see rent and rate is one. So we don't know the value of
Oh,
rent.
yeah.
We don't know the value of rent, right? So we should combine. But in our additional information, they have given us separate rent due and prepaid rent.
Yes.
So there is no problem there. So we'll take the one in receipt and payment, that is 3304. We less the rent due for the last year. That is what for 2014 is how much?
For 2014.
Yes,
Rent due was 240.
240. We had the rent due or accrual for this current period of how much?
Current period. 280.
Yes, 280, because we normally add accruals. We less the prepayment. Yes, that's why we less for 240. We don't need to account the accrual for the other year. They have already accounted that one, so we don't need them in the current income statement. And then we add the prepaid rate for the last year. How much?
320.
320. And then we less the prepaid for the current period, which is 2015.
360.
360. It's coming to how much? 3303 minus 240 plus 280 plus 320 minus 360. It's coming to 33004. The same value. There's no change.
Yeah.
Are you getting that one? 3304.
Yes. Yes.
Then that is the first expense. The second expense is we have done with rent and rates. We go to the, I'm not seeing any expenses, and then I'm not seeing any expenses. I think
Telephone.
telephone. The one which is additional information.
Oh,
Yes, we want to exhaust what we have in additional information.
okay.
We have depreciation, right? The last note. See, they have told us depreciation is to be provided as follows.
Yes.
We have clubhouse. Clubhouse wanachukua at what? 2%.
Depreciation is 2% on cost.
On cost. Our cost ni ngapi? 60,000. Huh? So tutapata depreciation ya ngapi? 2% times 60,000. We will get 1,200. Huh?
I'm looking for the clubhouse figure.
There is 2% rate, then to the cost.
Oh, yeah, 60,000.
60,000. Then to the next one is fixtures. Huh?
Fixtures, yeah.
Fixtures, they given us 10% on cost again. Fixtures ni 15,000. Huh?
Yes.
So it will come to 1,500. Another depreciation is equipment. Equipment wametuambia 20% on a reducing balance. So 20% on a reducing balance. Ametupia accumulated depreciation.
Na mali tumeifanya.
Kuna mali tuli subtract, that is the more, right?
Yes.
But alitupia accumulated depreciation, because when we say on a reducing balance, it means you have what? Less accumulated depreciation of what you have sold. So meanwhile, we will only take that the value ilikuwa 10 what? 800, right? Si tuli subtract 11,1200 minus 400.
Tukapata 10,800, yes.
10,800. So it will give us a depreciation ya ngapi? 20% of this one. It will give us a depreciation of
10,800.
1080. You take 10%, it is 20%.
Oh, 20. Oh, okay. 2160.
2160. Then, so let's look at there's what they purchased there. So I don't know this purchase, which account will affect. They purchased and they sold one, right? So you have to open them. They say, so we don't even let's open the more, not more account, so that we see, is there any loss or the expenses for this account?
So we are through with the
No, we are not
income.
through. We want to down to the additional information first.
Okay.
So I want to open this more account so that I know is there any account which will be affected. So more we have seen, it is a machine which you use to cut the grass. So the balance product hapa ilikuwa ngapi? The one aliuza ilikuwa included kwa equipment ilikuwa ngapi? 400, right?
400. Yeah.
400. And then they wakaipurchase hapa wakafanya trade in. Trade in tukakuwa na cash, tukakuwa na trade in allowance, right? So cash, ukiona cash kwa payment and receipts wamepeana moja ya ngapi? Kuna loan more ya 4400, right?
Loan more
On a payment side, walilipa cash ya 4400. Umeiona?
Yes.
Iko kwa cash book payment side. The last item before bank, so wakalipa 4,400. Then wakapewa allowance, trade in allowance. We have been told in note number 4. Trade in allowance of shilling what? 600. If we add them, it will come the total cost we have been provided there, which is what? How much?
5.
5. So to add inakuja 5 million. And then, so again, because hii ilikuwa balance pro down, wakai dispose. So here lazima to dispose. What is disposal ya ngapi? 400. Meanwhile, our balance carry down itakuja ngapi? Still 5,000. Ndio balance ikuwe 54. 400 hii side ingine ikuwe 54,100. Then because now we are saying we have disposal account, so let's open disposal account. We check if it is a loss or a profit. So we will open a disposal account here. Disposal account. Disposal account. So our disposal account here, we will debit the more account, which is the one we dispose, that is 400. And then we credit the proceeds they have paid us in form of allowance, that is cash proceed. We call it proceed of how much? 600. 600. Is it a loss or a profit?
600
it is a profit. It is a profit. So we sell more than what we purchased. We sell at 600 and we purchase it at 400. So it is a profit of how much? 200. So that profit we will take to the income and expenditure on a credit side. On a credit side. So here we will say profit on disposal. Copy to 200. Okay, then we go back to receipt and payment. Now we pick the direct expenses. They want with free marks. So we start with we have done with rent and rate. We have telephones and telephone. We have telephone expense. Telephones ni ngapi?
308.
308. Water and electricity. 734. Hizi ni free marks ya kuweka tu. Kuna stationery ngapi?
Stationery 364.
64. Then we have salaries and wages. Okay.
11,170.
11,170.
What's
Coach fee?
3,000.
3,000. We have field expense. That is 22,400. 44. What else? General expense. Go to 44. Not 44,
74.
So we can now check, is it a surplus or a deficit? If it is on a debit side, it is a surplus. If it is on a credit side, it is a
Yes.
deficit. So let's check. So add for me the debit side, I add for the credit side.
Okay.
10,544 plus 12,5.
26,708.
26.
708.
So me, I'm getting that 4,978. So meaning credit balance
The
is more
loss.
than. So here we have 978. So it will be on this side again 34,978. So the balancing figure will be a surplus. So we will take that one. That is 34,978 minus, say 26 what?
20.
26,708. So it will be minus 26,708 to give us 870. That is the what? A surplus. So this one is the one we will take it to balance sheet.
Surplus or deficit?
It is a surplus because credit side is more than the debit side. Our income is more than our expense.
Oh,
So at the
sure.
end, we will have a surplus. Approve it. Then, so we have done with the income and expenditure account. The next thing we go to they have asked us for statement of financial position. That is the balance sheet. So that one, it doesn't have more. It is not complicated because you have already done everything. So it is about copy pasting. So we'll have here, that is Uweso. So I will copy paste this one. That is Uweso Bank statement of financial position. That is SFB. 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 As at what? As at 30th September 2015. So I will start here with non-current current asset and cost accumulated depreciation, and I have a net book value NBV. So we have our current asset tulikuwa na gani? Kuna clubhouse. Clubhouse ilikuwa na cost ya ngapi? 60,000, right?
Yes.
Hatukuwa na accumulated depreciation, but tulikuwa na depreciation for the year. That is 12. Just 1,200. So if we subtract that 1,200, tutapata the net book value ya ngapi?
48.
6,058. And then what else? We have fixtures. Fixtures iko na cost ya ngapi? 15.
10,000.
10,000 na iko na depreciation ya 1,500. That one we have compute. Then so it will be 1,500 minus 1,500 to give us
500.
13,500. What else do we have? We have equipment. Equipment tulikuwa na 10,800 minus Tuko na depreciation ya ngapi? 21.
60.
Natupea ngapi? This one is 10. Is it?
86.
It is 10, 8,000, right?
Mm.
It is 10. It was 11 to 100. We subtracted 400 to give us 10. Is it? Why? This figure?
Will be 10,800.
It will be 800, not 8,000, right?
Mm.
When we subtract 2160, how much are we getting?
8640.
8640. Then tuko na more tuko na cost ya 5,000. Hatujaambiwa any depreciation, so it is dash. Then so it will be 5,000. We get, so you will submit, you get your total. Then we go to the current what? Current asset. We go to current asset. Our current asset. We start with the bank. Bank, we start with cash. So our bank ni ngapi? Kwa receipt and payment, that is the balance carried down. Tuko na bank ya ngapi? 14,082.
14,082.
Tuko na cash ya ngapi? 62, right?
62. Mm.
And so what else do we have as a current asset? We have a prepayment. I remember prepayment of rent and rates. The current year 2015 prepayment ni ngapi?
For 2015.
Yes. We only record for the current year. That is 360. Is it 360?
Hiyo ni 360.
Yes, 360. We have the inventory, that is closing inventory. Ngapi? Ilikuwa 710.
Mm.
What else do we have? What subscription in arrears is an asset. Subscription in arrears is a current asset for the current year. So for the current year ni ngapi? 350.
350.
Hizi current assets zilikuwa nyingi. Do we have anything else?
No.
So, tutajua kama ita balance ama ita balance, tutajua ni gani tumeacha. So we add, so then we go to, so the total value will come here. Itakuwa 14 plus 62 plus 360 plus 710 plus 350. How much?
15,564.
15,564. Then we go to the capital, equity and liability. So we have accumulated fund, the one we computed earlier on. Ilikuwa ngapi? Accumulated fund, the one which was in a trial balance. This one, it is this one. It is 92, 134. 18, 134. 92, 134. Then surplus, the one we called it from income and expenditure. Ilikuwa ngapi? In fact, it is here 8272.
1872.
1870, 8270. Then we have sijaona loan. I have not seen loan debentures. So meanwhile, we will have current liabilities. We'll bold this one. Also, this one should be in bold. Current liabilities, I have payables. That is per payables. Per payables for the 2015, that is will be what? The liability. We have not paid that one. That is 82.
820.
820. We have another one. Accruals. Accruals are rent ni ngapi? Accruals, this is rent.
280.
280. 280. I'm not seeing any other thing. That's why I told you balance sheet, you can prepare balance sheet without even any other workings because it's a free marks.
Pick.
That's why I told you I started preparing a balance sheet in a group and the whole biggest group account. So when we add this one, we will get how much? The current asset. It will be
31,940.
plus 3,500 plus 8640 plus 500.
Was it 60,000 or 6,000 for the clubhouse? Oh.
It is 60,000 minus 60,000.
Oh.
60,000.
Okay.
Ngapi?
85,940.
85,940. So when we add the current asset, tutapata total asset hapo ya ngapi?
$101,504.
101,504. What about ukiat liability 92? 134 plus 870 itakuja ngapi?
100,404.
404. Then ukiongeza hizo tutapata the total asset and liability hapa ni ngapi? Total equity and liability. Ni ngapi?
101,504.
101?
504.
504, is it? Yes, it is 101, 504. That's all. Called financial accounting, the easiest thing you Accounting is so easy. The problem is the moment you miss one value, kisha hapo ndio utaitafuta hiyo value. The moment ikuwa agreed na hizi, utakuwa umesweat kwa exam. So in exam, don't mind about balancing. Hiyo balancing wacha examiner na mwalimu, ndio? So what you do, this is your free marks. This marks is free because you have already given depreciation and the rate. So it's about computing and subtracting. Hizo ni free marks, ndio?
Yeah.
Hizi cash inventory zote, this is a free marks umepewa. Hakuna kitu na compute, right?
Wow.
Ukikuja hapa payables, that is liabilities. This is free marks. There isn't anything else you will compute. So meanwhile, you will miss only two. This one, you will miss only these two. So if it is, our question was how many marks? 8 marks. So you will get what? 6 marks, right? 6 marks without opening accumulated fund, without opening suppliers, you have got 6 marks.
Mm.
So in exam, you start like this question, unaiweka tu hizo, then you pack your 6 marks, then now you come to income and expenditure, you do, unafanya pole pole. Because already you know I have already packed 6 marks.
Mm.
But if you start from the other side, you might reach the income and expenditure, you lost focus. Then you will find that you will get wrong in the income and expenditure account, and again in the balance sheet you will not get anything. So you start from the balance sheet, because there is a lot of free marks. There is no computation there. Easy to utawacha ikiwa blank. This one you will leave it as a blank.
Mm. Na upite mtihani.
Yes, now Peter mtihani, you work smart.
Mhm.
So I hope that is the end of our